Hey, once again, welcome back to the Smart Money Bootcamp. Today we're going to be talking about break of structure, or BOSS, or BOS, as you're mostly going to see it written on charts and throughout the rest of this lesson today. We're mostly going to be covering break of structure in terms of how it relates to smart money concepts, but we're going to briefly talk about break of structure in general as well. And before we really get into the information, there's something that I wanted to touch on, and I want to stress how much traders seem to overcomplicate break of structure. Don't ask me why, but most trading students seem to struggle with break of structure. They overcomplicate it. They think that they're wrong when they're looking at break of structure. This is going to make more sense later on when I show you the chart examples, but everybody, or not everybody, but a lot of people seem to question whether or not they are right about break of structure. And to be honest, it really is not that hard. It's either a break of structure or it isn't. Now, there's things called liquidity grabs, and that's a whole nother story, but we will get to that. And honestly, you can use liquidity grabs and stop runs and stop hunts as trade setups, and we will also get to that. But first, a break of structure lets us know which way the market is typically going to go. We want to understand whether we are bullish or bearish, and we want to look for a break of structure that supports a continuation of that trend. In other words, when the market breaks structure in the direction we are anticipating, this is a confirmation that we are on the right side of the market. Remember, break of structure is king. If you don't write anything else down, write that down. Write it in big letters, underline it, circle it, highlight it, write it in capital letters. Ingrain that in your mind. Try to remember that in most cases, a true break of structure shows in which way the banks are going to move the market, because many of the times I find that I'm waiting for a break of structure to actually validate my trade setup. Another key point is that if you want to be confident about your order block or your fair value gap or imbalance, and you want to truly validate your order blocks with an actual break of structure and not just a move above the order block, because in the way that we trade at OzFx, we can't have a valid order block without a break of structure. That's just how it is for me. Some traders say that an order block is valid when the high or low of the order block is cleared. So for instance, if this is the order block that they were looking at, or some traders are looking at, or just what I'm talking about right now, as soon as this candle right here breaks this candle, don't worry about all this, but as soon as it just breaks this candle, or say maybe they were looking at this candle and then this came up, and like say maybe this candle was broken in half, okay, and this candle cleared the top of the bottom candle here, that would now be considered a valid order block for some people. No, for me, there needs to be some kind of break of structure like I'm illustrating here. This is the structure that was set in place here, and then this breaks through it. We follow break of structure at OzFx. Now, if you've been reading this slide this entire time, I bet you're reading the very last point that I have on this slide, and I'm probably going to get some crap for it, but not all the time, but in some cases, you can use wicks when looking for a break of structure. I know that sounds crazy. Contrary to popular opinion, wicks can in fact break structure. It depends on the time frame you're on. Ultimately, on the higher time frame, you want to pay more attention to bodies of candles. Yes, bodies of candles concretely indicate a break of structure, but I'm going to tell you why wicks can break structure. I'm not telling you to look for wicks that are breaking structure, but I'm telling you to investigate when you see a wick taking structure. I'm not saying you just see a wick go above the previous structure and that's a break. No, that's not what I'm saying. You have to investigate, because it can depend on the market sentiment at the current time and also the magnitude of the move being made. You want to see a clear displacement. That means a sharp move. Like what we see here, this was consolidating and then an explosive move happened. Some might say that this idea is crazy, but backtest it and use time frame theory when doing so, because the banks don't care what candles or wicks look like. They look at price and liquidity. They are looking at certain levels in the market, and either they're looking for a stop hunt, they're looking for a run on liquidity, or they're looking to break structure while taking liquidity at the same time to continue moving the market in their desired direction. Don't come to me and debate this. Just backtest it. Use time frame theory. I'm telling you, you will be amazed at what you come to find. When do we have a break of structure? We have a break of structure when either the last high or low in the market has been taken out. This can be relative and change depending on the time frame that you're on, because we can have a monthly, weekly, daily, 4-hour, and any time frame break of structure. Obviously, a break of structure on a higher time frame holds more validity, but this goes back to the wick thing that I was talking about. If we can have a monthly, weekly, daily, 4-hour, and any time frame break of structure, then that means what a wick looks like on a 1 hour could be a 1 minute break of structure. So there's break of structure everywhere, and this is why people start to question and start to overcomplicate break of structure, because of this fact right here. You just need to decide what time frame you want to work on, and if you only want bodies to signify a break of structure for you, then that's how you do it. That's what you stick to, but you have to stick to it every single time. If you trade the 1 minute, then a break of structure on a 1 hour is not the same kind of break of structure on the 1 minute, but you want to go off of the higher time frame. You want to start on the higher time frame and work your way down. Obviously, a break of structure on a 1 or a 5 minute is not going to be as valid or hold as much weight, or even maybe trade in your desired direction as long as a 1 or a 4-hour or daily break of structure. If we are bullish, we should be looking for a break of structure to the upside following a retracement back down inside of an order block at the bottom of the previous range. This is where a standard entry can take place. So at this point, without the imbalance lesson, with everything that I've given you so far, you have an entry model that you can use in the market, okay? And I'm going to draw it right here. Okay, so remember, say the market's ranging back and forth like this, and it's creating liquidity, which is something that we've already talked about, right? Whoops. Boom. Liquidity on the top of this consolidation right here, right? And then we have what? A break of structure to the upside, which is what we just talked about right now. And what's left down below here, because what? We've broken structure. So we have now order block at the bottom of this range. Exactly what I just explained on the last slide. This is also an area of demand. And what else did I say? So we want to have a break of structure with an order block at the bottom of that range, and we want to see a retracement back down into that range. This is a valid setup. This is the only setup that you even really need to look for, especially as a beginner. You want to look for a range created, sponsored by an order block with a break of structure, retracement back into this zone right here. And this is when you could either take a long to the upside, or you could wait for a confirmation entry, which is something that we're going to talk about shortly, but I'm not going to talk about it on this episode because we're still just covering break of structure. But this right here is a break of structure. This is structure right here, and it's broken. This can be an internal break of structure or an external break of structure, which is something I'm going to show you in the charts. Okay, so we're back over here on TradingView, and right now I have Bitcoin pulled up. This is just what was on my TradingView. So I came out to the weekly because I figured we could start top and work our way down. I'm going to show you all kinds of different breaks of structure. I'm going to break down internal breaks of structure, external breaks of structure. Just bear with me. Don't overcomplicate it. I'm going to show you how people overcomplicate it and why you shouldn't. Okay, so the first thing that I see is, if I just want to show you a general break of structure, okay, so say we're on the weekly, right? All of this is a consolidation here, and what happens? It sets in structure. So there's structure here. The structure right there. This would be called external structure because it's on the outside. This is your extreme. This high pushed to this low. This is creating structure down here. So external structure, external structure. On the inside of that range, every fractal on the inside of this range is a point of internal structure. Okay, so right here, this is all internal structure right here, all on the inside. So as of right here, we have an internal break of structure, but it's still a break of structure. Let me zoom in on this for you. Okay, so here we are zoomed into that area. Okay, so extreme, extreme. Let me label these for you. And extreme. So you got extreme, extreme, and why? Because this is the outside of this range right here. Outside of the range here at the bottom. This is internal. This is internal structure right here. This is internal structure right here. Internal, we got a break of structure down here, and we got a break of structure right here. Now these are internal breaks of structure, but they are still breaks of structure, okay? And what happens, this break structure come back down into an order block most likely. Here we are on the weekly, so on the daily there's probably something in here. And then we have what? We have an external or an extreme break of structure. These are all breaks of structure right here. and people get caught up on which one matters. And yeah, sometimes you're going to be wrong, and sometimes you're going to take a loss. That's trading. If you haven't learned by now that you're going to take a loss in trading, well, here you go. That's a lesson. If you didn't learn anything today, at least you learned that. All right, now let's go over here. Obviously, this is a break of structure right here. And yes, these are just wicks, right? On the weekly, these are just wicks, but this is still a break of structure. You can also say that these bodies are higher than these bodies, and yes, that's true. So all in all, this is a break of structure here. Just like this is a break of structure. That's a break of structure. Why? Because it's a fractal in the market. Here's structure, and this is actually external structure. Why? Because low pushed to a new high. This is a whole leg of structure. So if you want a weekly true break of structure, it needs to break through this. And this is why people get caught up, because they look for actual market structure shifts. When they're looking to just place trades, they're trying to base what is the break of structure off of the true market shift, when in reality you had a break of structure right here. You come down into it and it left behind an order block right here that you could have gotten into to actually take the entire market shift, targeting the liquidity that's right here. Okay, so that's how some people confuse it and overcomplicate it, because regardless, this is still structure right here. And technically this is what broke this high, but this is the extreme down here, because 1, 2 did not make a new high. This is what made the new high, which in turn makes this all one leg of price action. On the weekly, it might be different on the daily and on the 4 hour and on the 1 hour. That's why I'm saying structure is relative to the time frame that you're on. Then once again, you got this right here. It breaks structure, never retraces. It just continues to break structure to the downside. Now, if we zoom in here to where price is actually at currently, I have an example for you, and I can show you it better on the daily. So this is where we're going to start moving down time frames. Okay, so if you look, the market's been trending down this entire time, okay, until right here, okay. This is the last structure point. We have now broken structure. Breaking above this doesn't really matter, because why? This is internal structure right here. This is the external. This was the external. Why? Because this high pushed to this low, and now we've taken that. That is a break of structure. Just like this is in fact a break of structure. It's just an internal break of structure. Does that mean that it may not have came up like this, came back down like this, and went back up? That very well could have happened. It's still a sign that it's going to the upside, and it happened very rapidly. Obvious displacement in the market. Now, when I say obvious displacement, I'm basically talking about this right here. Boom. Obvious displacement, right? This obviously very sharply and very rapidly broke through structure. It broke through this structure and it broke through this structure. That is displacement. That's what I mean when I say displacement. Now, the next structure that this needs to take is this right here. That's the next structure point in the market that we need to break. It's struggling there right now. But to just put this in perspective for you, even this right here is a break of structure. This is still structure in the market. This still set in structure. Is it important? Not as important, but this was a structure point in the market, and we broke through that structure. Does that mean that this order block right here is going to hold? Not necessarily. We got all this imbalance down here, imbalance right here, and this broke structure also, and there's been no retracement to the downside, so we are due for one. But if you want to go by, is there a daily break of structure? Yes, there is. Now, let's go down to the 4 hour time frame. Okay, and now see, when we go through this on the 4 hour, there's not really much to see here because the market has just gone up very rapidly. But let's go down to the 1 hour, investigate a little bit more. Okay, so here's where things start to get a little more interesting, all right? If we go down here, okay, let's start right in here, okay? So at this point right here in the market's coming down, up high, down, up high, lower low. I mean, I guess you could come all the way up here, boom, boom, and that's your first little break of structure. That is a wick going above structure, right? It goes above these bodies. It's just a wick, but if you go down time frames, there may be a break of structure. This could just be a stop run to reverse to the other side, but it never actually goes to the other side, right? And then if we move on over here, see, structure's been moving down the entire time. But this wick right here may actually be a signal that we may be going to the upside, right? Now, structure sets in right here, we take it, right? Structure sets in right here, we take it. These are all still breaks of structure. This is a new structure point right here. What do? We break it. That is a break. This is now intermediate and internal structure right here that we break as a stop run or a continuation of the trend off of this order block right here. And we do what? We break structure. Wick and all, breaking structure. What happens? Sets in structure, we break it. We set in structure, we break it. We set in structure, we break it. We set in structure, we break it. So I'm probably starting to get a little redundant by now. Set in structure, we break it. Set in structure, we break it. The market is constantly breaking structure, taking liquidity, and mitigating order blocks and filling imbalances. If you're not beginning to see it a little bit by now, make sure you go back into your charts and backtest everything that I've gone over in the Smart Money Bootcamp so far, so that you can see it for yourself, because at the end of the day, experience is what's going to help you learn and progress in this market. Not watching my videos, it's going back and practicing these concepts on your own. So what's the best thing that you can do here is you can go back into the charts and just look for breaks of structure. Even if you have to go back on the replay mode, pick a random point in time and start looking for breaks of structure and see what happens afterwards, what happens after that break of structure. That's where you're going to get your research. That's where you're going to learn. So like I said, break of structure is not a subject that needs an absolute hour-long video, because it's just going to be redundant. I'm just going to say the same thing over and over and over again. If there is a point in the market, right, these are all structure points. Structure. Anytime when we move through an old point, old fractal in the market, that is structure. But it's what structure are you waiting for it to break, right? If the market, for instance, like on the daily, right here, like I said, this was the structure point that we needed to switch from bullishness to bearishness, in my opinion. Some may have argued that this was the point because this low didn't hold, and that's where, I mean, this is all relative. It's all relative to what you see and how you read price action. So that's where you need to identify levels in the market that give you information on where the market wants to go. But remember, break of structure is king. I will catch you guys on the next video.